The American car market right now, it feels like a house of cards in a windstorm. You've got used car prices pushing past 30 grand for a car that's 3 years old. And not some luxury beast either. Just your average SUV, still carrying toast crumbs from the last owner's kids. We haven't seen numbers like this since the chaos of 2023. And even back then, it didn't feel this unstable, because here's the thing. Underneath those big price tags, the whole thing's wobbling. And nobody wants to admit it. The dealers, the automakers, they're all telling the same story. Inventory's tight, demand is strong. Yeah, well, try telling that to the fella working 2 jobs and still can't afford a 10-year-old Corolla. Out in the real world, affordability is gone. People are stretched so thin you could read the news through their paychecks. It's not just a slowdown, it's a standoff, and that tension is about to break. Now here's the bit no one's saying out loud. The whole market is primed for a correction. Not next year, not maybe, right now. And I'm going to walk you through what's really going on. We'll look at why these headlines don't match reality, the pressure building under the surface, and the exact moment I believe prices will finally crack wide open. Stick with me. By the end of this, you'll know whether to buy now or wait and grab the deal of a lifetime. So, let's start with the obvious. Prices, they're high, painfully high. In July 2025, the average price of a used car sits over $25,000. That's not a typo. That's the price of a brand new family car just a few years ago. And the thing is, this isn't being driven by strong demand, like they'd have you believe. It's being propped up by a massive shortage of affordable 3 to 5 year old cars, the ones people actually want and can reasonably pay for. The pandemic gutted supply. Automakers built nearly 8 million fewer cars over those years, and now that hole's finally come back to bite. So yeah, the clean, low mileage stuff is selling, and it's selling fast. But everything else, all the high mileage trucks, overpriced SUVs, and brand new models with fat price tags, they're stuck. Dealers are sitting on inventory that doesn't match what the buyers are looking for. And the longer it sits, the more it costs them. Which brings us to pressure number 1. Interest rates. Look, if you've tried financing a car lately, you've probably felt the punch as of early 2025. The average interest rate on a used car loan is nearly 12%. If your credit's not spotless, forget it. You're looking at 14 to 20% easy. Let's do some quick maths. A $30,000 car loan at 4% used to cost around $470 a month. Today, at 12%, that same loan, it's about $585. That's $115 a month gone. And over 6 years, you're out nearly $8,000 extra. Just in interest for a car that's dropping in value every day. So what are people doing? They're stretching the loans out even further. 7 years, some even go to 8. It makes the monthly number look manageable, but it locks you into a losing game. The second you drive off the lot, you owe more than it's worth. And that negative equity sticks to you like chewing gum on a shoe. People know this, and they're backing off. Pressure number 2, inventory rot. You'd think with prices this high, supply must be low. But that's only half the truth. The affordable stuff, sure, there's not much of it. But the stuff that is available, the big ticket, fully loaded luxury trims, they're sitting. Dealers bought high, thinking the hot streak would last forever. Now, they're stuck paying daily interest, called floor plan, on rows of vehicles no one wants. They either sell them at a loss or let those interest charges eat into their margins week after week. That's not good business. That's a ticking bomb. Pressure number 3, the buyer is broke. Let's not dance around it. 2 years of inflation, rising rent, groceries, gas, childcare, everything's gone up. And auto loan delinquencies, they're rising fast. As of mid-2025, nearly 3% of borrowers are over 90 days late. That's not a blip. That's people losing their cars. And every repo that hits the auction adds more inventory to the pile. That pushes prices down even more. And finally, pressure 4, fear. Dealers are no longer confident. They're no longer in control. We're already seeing manufacturer incentives trickle back in. Low interest offers, cashback deals, stuff we haven't seen since before the pandemic. Wholesale prices, the prices dealers pay at auction, are dropping. And when wholesale drops, retail follows, usually within 4 to 6 weeks. That's already happening now. So when does this all snap? My call, September through January. That's when it all comes to a head. Dealers will be holding leftover 2024s, unsold 2025s, and trying to clear space for 2026 models. They won't be able to float it. They'll cut prices, add incentives, beg for buyers. And if you're ready, that's your moment. What should you do? First, don't rush. If your car's still running, give it a few more months. Second, get your financing lined up now. Credit unions, banks, shop around. Walk into the dealership with a loan already approved. That's real leverage. Third, pick your targets. Choose 2 or 3 models. Start tracking prices every week. When you see them drop $2,000 in a week, you'll know the turn has come. And finally, don't be afraid to negotiate. The power's shifting. The days of take it or leave it pricing are over. If a car's been sitting for 90 days, the dealer's already sweating. Make your offer. Be fair. Be firm. And walk away if you have to. Another one will pop up. The bottom line, this market is cracking. Correction is already underway. If you stay patient, stay sharp, and know what to look for, this could be the best buying window we've seen in over a decade. So hang tight. Your deal's coming.